When we consider the race that specifically these AI juggernauts seem to be in to go public, it's not just a question of if they beat each other. Are they also going to beat a regulatory framework that guides them as public companies operating in this space? And we just saw a few weeks ago the president pulling an executive order that would have helped regulate AI.
Yes, and all of these big muscle movements are happening at this exact same time. They're trying to IPO on a valuation in the absence of a regulatory structure. And one of the things that might determine some of that valuation is a regulatory structure. So there's so much uncertainty going into these extraordinarily generous valuations. I have an MBA, and I think it's useful sometimes to just go back to Business 101. What do these valuations mean? If you were to buy, an annuity that it was valued at $1 trillion, the interest-free risk-free rate is currently 4.5%. $1 trillion annuity would mean $45 billion in guaranteed cash every year for the rest of time. And they're saying that these companies, some of which not only don't currently make a profit, but actually lose significant amount of money every year, are worth north of $1 trillion. What's that kind of bet based on? It's based on the explosion in revenue that they're generating. Anthropic has disclosed some of their run rate numbers, and they are jaw-dropping.
Staggering.
End of last year, they were at a $9 billion run rate, which means if you took their December monthly revenue and turned it into a 12-month annual, it would have been $9 billion. Now it's reportedly north of $47 billion. That is 5xing the company's revenue in 5 months.
Incredible.
That bodes well for the future of this company. But as you started out by saying, there's so many different things going on. There's still so much uncertainty in this ecosystem.
I can't imagine why someone would want to open an AI research company right now.
There's a lot of unanswered questions, and I'm happy to try and help answer.
Congratulations. We're very happy for you here because you've helped us understand a lot. And I want to go back to this. It was almost 2 weeks ago the president decided to cancel a signing ceremony for his AI executive order. He was asked about this, but there were executives on their jets in the air on their way to Washington when he pulled the plug on this event. Reporters asked him why. Here's what the president said.
I postponed it. I think it gets in the way of, we're leading China, we're leading everybody, and I don't want to do anything that's going to get in the way of that lead. We have a very substantial on AI. It's causing tremendous good, and it's also bringing in a lot of jobs, tremendous numbers of jobs. Again, we have more people working right now than we've ever had. I really thought that could have been a blocker, and I want to make sure that it's not.
A blocker, he said. Somebody got on the phone with him. Reportedly, it was Zuckerberg, Elon Musk, and others.
David Sachs, the former White House AI advisor.
David Sachs might have that cell phone number, that it would interfere with competitiveness. Is he right?
Well, let's start with sort of what's reasonable in what the president is saying. He's talking about competitiveness mostly with China, which actually has AI models. Some of them are pretty good. And depending on how you sort of measure how good the AI models are, you can say roughly that the United States has something like a 12-month to 18-month lead on China in terms of where their models are today and where our models are today, and sort of where their models are compared to where we used to be. Now, the draft executive order, which was leaked because all these executives had a copy, they had been told in advance, they were in the air, as you pointed out, and that was talking about a 90-day pre-release review period. So think about if you're President Trump.
That's right.
Okay, 90 days, and we only have an 18-month lead, so we're going to consume, a month and a half of that just for risk reduction. Is that a reasonable trade-off? Well, here's the thing. It wasn't even mandatory. As I said, we have the text of the executive order, and it was voluntary only. Wow. So if there really was some kind of concern, right, that this was going to take too long, you didn't even have to ask permission to not go through this sort of framework. And so you have to ask yourself, why is the government opposed to building the kind of capacity that we need to ensure that these models are safe, that they're going to work as intended, and they're not going to get in the hands of the wrong people? Let's not forget sort of how we got here. The Trump administration took office saying they wanted to dismantle all kinds of AI regulations, that the risks were not that significant. Then they met Claude Mythos. And according to some of the reporting on this, half of all the cybersecurity vulnerabilities that have been discovered ever were discovered by Claude Mythos just in the past handful of months. I mean, this thing is a chainsaw to most organizations' cybersecurity. Now, imagine if Anthropic had taken a different approach to releasing that model, just throwing it out into the wild and saying anybody who wants to use it can use it. I think a lot of banks would have been opposed to that kind of outcome. A lot of healthcare institutions would have been opposed to that kind of outcome. And so Anthropic was kind enough to go off and do this.
Right.
But how do we know that future executives of future companies are going to have that approach? And how do they even go to the government for help, right? One of the things we need the government to do is to invest to get good at these types of skill sets so that there are people who companies can call to check their homework and understand whether or not they've done a good job securing these models.
We want to continue this conversation on the models. I do just want to mention, though, a redhead that just crossed the Bloomberg terminal. It's actually coming from a True Social post from the president regarding talks with Iran, which he says are continuing. And he says, quote, "They're continuing at a rapid pace with the Islamic Republic of Iran. Thank you for your attention to this matter." That is all the president said. No context as to whether or not these continuing talks are going well. And yet it seems to be enough, at least for equity markets, which just hit session highs. We're around 76.13 on the S&P 500. The NASDAQ 100 briefly was up a full percentage point right around session highs as well. So we'll continue to monitor that. But we also want to continue this conversation on AI. You were talking about the notion of our competitiveness with China and how we do have a lead on that. How much of that competitiveness doesn't just come from making sure that our artificial intelligence companies have an advantage and aren't running into red tape versus also making sure that China can't access the chips to power their own artificial intelligence development?
Well, this is obviously a topic that has been at the center of U.S. foreign policy for years now. I mean, it started really with the first Trump administration trying to restrict Huawei's access to advanced chips. They were thinking about phones and laptops, but now we know really what counts for strategic impact is thinking about AI. Well, the Trump administration has been back and forth on this issue. First, they tightened controls, then they loosened them, then they loosened again. But there was one line that the Trump administration and President Trump himself said he wasn't going to cross, and that was selling NVIDIA Blackwell chips to China, the latest and greatest. But according to an issuance from BIS just on May 31st, just yesterday, they had to issue a clarification on a rule that made it obvious that they have been allowing the sale of Blackwell chips to go to Chinese companies not based in China. Wow. So President Trump assured Americans that China wasn't going to get access to these Blackwell chips, but now it's clear that his own government is saying, actually, because of how we were interpreting our own rules and how we were not clarifying the questions that companies were asking in terms of what was allowed and allowed, they allowed a lot of these sales to go through. And we don't know the full scope of just how many chips were sold. But ask yourself the question, why was China so casual about saying, we're not going to buy any of these NVIDIA Hopper chips? Plausible explanation? Because they were allowed to buy the better chips, and they just didn't want to say the quiet part out loud.
Wow, incredible. We heard from Jensen Huang himself last evening. This is the Computex annual speech and event. Is a big keynote, tends to move the stock, and today it is for the better. I'm going to ask you to play that SOT in a second here, Sam. There were a couple of announcements that came out of this, including a CPU that would make your own laptop or PC AI enabled. That seems to be moving the stock. But more interesting for this conversation was what he had to say about coding and the SaaS-pocalypse that we've spent so much time talking about. We're not going to need fewer coders. We're going to need more, is essentially what his message was. Listen to Jensen Huang at Computex.
People talk about AI reducing jobs. Complete nonsense. It's causing more software engineers to be hired because the output is so incredible. People want to hire more software engineers. This is going to show up in our economy somehow soon. And so the first thing is useful AI has arrived.
It's an incredible time to be a software company, he says. We're going to be hearing from CrowdStrike and Palo Alto this week, left on the side of the road in the SaaS-pocalypse, but most recently have been rallying because of what you pointed to. Mythos, that in fact we will need cybersecurity to deal with these threats. What do you make of this confusion over software and its relation with AI?
Well, so Huang's comments are actually correct in the data that we can observe, but they need a little bit of context. It's not just every type of software developer demand for them is going up. It's really those most seasoned engineers, the ones who are qualified to grade AI's homework and observe when it's going in the wrong direction.
Okay.
You know, if you have a complete novice who is using AI to generate software, they can get a little bit down the road before they find out that somewhere their AI made a wrong turn, and they're not really qualified to assess where that wrong turn was. So the job breakdown has sort of been, we need fewer entry-level people, the kinds of folks who are probably not qualified to oversee and check all the work that AI are doing, and more of those seasoned people who can actually understand and make use of these tools. Those types of individuals are 10xing, maybe 100xing their productivity. And if I told you that, a software developer today for the same price can do 100 times more work than they did last year, you might want to hire more of those folks this year. But what actually determines the overall ceiling for labor demand is the elasticity of that demand, which is to say, if the cost comes down, how much more do you want to buy? Think about this in terms of food production in the United States, right? In 1920, 1 out of every 3 Americans who had a job on a farm. And today we produce way, way, way more food with way, way, way fewer farmers. And that's because we can all double the amount that we can eat, but we can't 100x the amount that we can eat. So that's how the job destruction leads. But in software, you can 100x the amount that you eat. The elasticity of demand, we're nowhere near the clearing point there.
Truly fascinating.